I'm Asif Farouk and this is Finextra at Cybos. We're here today with Tom Carey of Broadridge. So increasingly firms are looking at mutualizations of costs in the post-trade space. Can you describe what's meant by this, and secondly, why is it growing in prominence?
Mutualisation in industry is all around the sharing of fixed costs across many banks. What's happened over the last 10 to 15 years is that firms have built up typically their fixed cost infrastructure, and now they find in increasing economic pressures the need to actually share that across the industry. The only way to really achieve that is to actually outsource parts or all of your operations and services, and by doing that you share the regulatory burden of what you're doing in terms of regulatory change, in terms of operational change across many firms. What's really changed in industry over the last 6 years is return on earnings has dropped dramatically for banks. They've tried to compensate for this by reducing their cost base, by reducing their internal fees, but have found increasingly that it's impossible to achieve the yield curves they need to achieve, and therefore they've chosen to mutualise by outsourcing to other firms.
So multi-asset processing appears to be another emerging trend in the post-trade arena. Can you tell us more about this and how it can be a benefit?
Indeed. What's really happened is that if you go back over the last 10, 15, 20 years, many firms built their infrastructure around silos. They had equities, fixed income, derivatives as silos. And that would work very well for a while. But what firms have now realised is that, one, they have multiple vendors, and those vendors obviously have compounding effect on margins and actual vendor choice. They've also found that to actually manage risk now is much more difficult because you're looking at risk across many, many silos, many platforms. So the emerging strategy, I think, is really around having a multi-asset centralised service, having your books and records and your information in one place, and then being able to manage your risk across that, having tools and services that look across the whole holistic platform rather than verticals.
And is there anything more that can be said about straight-through processing, or do you think the industry has reached its optimal efficiency level?
I don't think so. I think what's really happened now is with a combination of mutualisation and a combination of the ability to analyse data now in our industry, there's a lot more to be done. Historically, people were looking at fail rates and other inventions, but I think now what you can do is you can start to look across your peer group, analyse geographies, analyse commercial terms, and actually look at what you're doing day to day and week to week, and actually work out trends and patterns using very complex heuristics. So that advantage that's coming into industry will help us, I think, improve STP even further, and I think come to the next generation of how we actually look at and analyse STP.